Hey XLM family, how you doing? Let's get straight into it and talk about what's really happening with Stellar right now. There's been a lot of movement in the broader crypto market, and as always, Stellar tends to follow certain patterns that are worth unpacking in detail. We're moving into September, and this shift into a new month is always a good time to step back, review where we've been, and think carefully about where we might be headed. Today, I'm going to break down XLM's recent performance, share what September might look like, talk about price predictions, and give you some broader context that I think will help you understand what's going on, not just with Stellar, but with crypto as a whole. So, first things first, let's look at where we are right now. XLM is currently trading around 35 cents, which reflects a 1.7% dip in the last 24 hours. If you zoom out to the weekly chart, it's down roughly 13%, and on the monthly view, it has slipped about 7.3%. According to CoinMarketCap, this downward pressure has been pretty consistent since mid-July, when Stellar touched its local high at about 51 cents before starting to consolidate and drift lower. That means for roughly 47 days, we've been in what I'd call a consolidation phase with a slight downward bias. You can literally see this trend if you plot it out, a series of lower highs that's carved out a descending pattern. Now, the big detail worth noting is that we've broken through an important support zone around 37 cents. Once support gives way, the market often retests and then settles into a new range, and right now that range is forming around 35 cents. This is a critical level to watch because if it holds, we may simply be consolidating before another move higher. But if it fails decisively, then we could drift toward the upper 20-cent levels. From a purely technical standpoint, that's the next strong support area visible on the charts. Let's frame this in the context of September, because this upcoming month could be tricky for crypto. Historically, September hasn't been the most bullish month for the markets in general. Both equities and crypto tend to lag during this period. And right now, we have a macro factor front and center, the U.S. Federal Reserve. Investors across all markets are watching the Fed very closely because interest rate policy drives liquidity, risk appetite, and by extension, crypto flows. Reuters has reported that there's growing expectation the Fed may cut rates later this year, depending on how jobs and inflation data look. The jobs report that's due this week will be one of the biggest indicators guiding the Fed's decision. Why does that matter for Stellar and other cryptos? Because rate cuts generally weaken the dollar, and a weaker dollar can drive money into risk assets like crypto. But it's not always a straight line. Markets often sell off in anticipation of uncertainty before rallying later. That's why September could be rough in the sense of sideways or downward movement, with bursts of volatility depending on how the Fed communicates its intentions. So, in short, don't expect fireworks in September. Expect chop, expect noise, and be prepared for possible dips. Now, let me address the worst-case scenario because I know that's on many people's minds. I don't believe we're going to see Stellar collapse into the teens or below 20 cents unless there's a massive black swan event. What seems more realistic is a test of the mid to high 20-cent range. That would align with technicals and with how Stellar has behaved in past corrections. Personally, if we dip into that range, I'll be buying. Not financial advice, just my conviction. I already hold XLM, but I'd be adding aggressively if we saw that kind of pullback. Why? Because Stellar isn't just another altcoin floating around in the market. It's one of the few projects that is actually ISO 20022 compliant. For those who aren't familiar, ISO 20022 is the global messaging standard being adopted by banks and financial institutions for cross-border payments and settlement. According to the International Organization for Standardization, this framework allows different payment systems around the world to communicate seamlessly. The fact that Stellar aligns with this standard puts it in a unique position for institutional adoption. When corporations and banks start looking for crypto assets that can integrate with their compliance and regulatory frameworks, ISO-compliant projects like Stellar and XRP will be on the shortlist. That's a huge deal because it separates Stellar from the noise of speculative projects with no clear utility. This is one of the biggest reasons why I'm so bullish on Stellar over the long term. It's not just about speculation or chasing quick gains. It's about being positioned in a project that aligns with the future architecture of global finance. And that's not just my opinion. If you look at adoption trends, you'll see more and more pilots, partnerships, and collaborations that highlight Stellar's role as a bridge for payments. From remittance companies to fintech startups and even conversations around central bank digital currencies, Stellar keeps showing up in the narrative of interoperability. Now, I know many of you who follow XLM also keep an eye on XRP. The two often get compared, and for good reason. They serve similar roles in the cross-border payments ecosystem. Let me give you some perspective on XRP's technicals because they can inform how we think about XLM. Right now, XRP has a support zone around 28 cents. If that breaks, it could slide to 25 cents, and if 25 gives way, the next stop is probably around 20 cents. That would likely be the bottom, and if that scenario plays out, I'll be a buyer there too. The point is that both of these ISO-compliant projects are sitting at levels where long-term investors should be paying attention, not panicking. Let's circle back to September and put this all together. My base case for Stellar is continued consolidation, maybe drifting slightly lower into the high 20s, unless the Fed surprises with a dramatic policy shift. If they hint at aggressive rate cuts sooner than expected, markets could actually tumble first out of fear and uncertainty before stabilizing later in the year. The jobs data will be key in shaping that narrative, so keep your eyes on it. But regardless of short-term turbulence, the bigger picture for Stellar remains strong. So, here's the takeaway. Stellar is consolidating after its July high, with short-term downside risk toward the high 20-cent range if macro conditions pressure the market. September is likely to be choppy, driven by Fed policy and jobs data, but long-term fundamentals remain rock-solid thanks to Stellar's ISO 20022 compliance and growing adoption story. For traders, this is an environment where having tools and strategies is more important than ever. And for investors, this is a time to stay patient, think long-term, and be ready to take advantage of dips. When we talk about September being historically weak, that's not just crypto folklore, it's backed by decades of data. If you look at U.S. stock market history, September has often been the month with the lowest average returns. Analysts sometimes call it the September effect. While nobody can fully explain it, the general theory is that after summer, investors begin repositioning portfolios, harvesting tax losses, or pulling back risk before the final quarter of the year. According to Investopedia, the S&P 500 has delivered negative average returns in September more than in any other month. And crypto, being a high beta market that tends to mirror broader risk-on sentiment, often inherits that seasonality. We saw this in past cycles. In September 2020, for example, Bitcoin and altcoins retraced sharply after a summer rally. In September 2021, right before Bitcoin's run to all-time highs, we also saw weakness. Even in September 2022, during the bear market, there was further downside pressure. So, when I say September could be rough, I'm not being pessimistic. I'm being realistic based on how both traditional and crypto markets behave during this period. Now, add to that the Federal Reserve dynamic. The Fed has been in a tightening cycle for over 2 years now, raising rates to combat inflation. High interest rates tend to hurt risk assets because borrowing becomes more expensive, liquidity dries up, and investors prefer safer assets like bonds. But in 2025, the narrative has started to shift. Inflation is coming down, and growth is stabilizing. That's why many economists believe we're approaching the point where the Fed will pivot to rate cuts. According to Reuters, policymakers are already signaling that cuts could arrive if jobs data and inflation continue to trend in the right direction. Why does this matter for Stellar specifically? Because rate cycles directly influence investor psychology. When rates are high, speculative investments like crypto suffer. But once the market senses that cuts are coming, risk appetite returns. Money flows back into assets like Bitcoin, Ethereum, and yes, Stellar. Historically, the early stages of a Fed pivot often align with the beginning of a new bull run in crypto. Think back to 2020. Rates were slashed to near zero during the pandemic, and what followed was one of the most explosive crypto bull markets in history. So, here's the scenario I'm watching. September could be choppy as the Fed and jobs data dominate headlines. But if we start seeing clearer signals of cuts, then Q4 could turn into the setup for a much larger rally. And Stellar, sitting as an undervalued mid-cap coin with real utility and ISO compliance, could benefit disproportionately once confidence returns. Let's dig deeper into what ISO 20022 really means, because I think a lot of people hear the term but don't fully grasp the significance. ISO 20022 isn't a crypto invention. It's a messaging standard for electronic data exchange between financial institutions. It's essentially the universal language that banks are adopting to communicate more effectively about payments. SWIFT, the network that underpins global bank transfers, has been migrating to ISO 20022. So when a crypto project like Stellar or XRP says they're ISO compliant, what that really means is that they can integrate into the same standard banks are using. That makes them far more attractive to institutions that need seamless interoperability. Imagine you're a global bank or a payment processor. You want to experiment with blockchain, but you can't just pick any random crypto. You need something that plays nicely with the compliance and regulatory frameworks you're already using. That's where Stellar comes in. It's designed for low-cost, fast, cross-border transactions is already appealing. Add ISO 20022 compliance to the mix, and suddenly it becomes a realistic option for enterprise-level integration. According to SWIFT's own updates, by 2025, ISO 20022 is expected to be the dominant standard for high-value cross-border payments. That's exactly why Stellar's positioning is so important right now. Let's also touch on adoption. Stellar isn't just theory, it has a track record. For example, Stellar has partnered with MoneyGram to power crypto-to-cash remittances. That's real-world utility, especially in emerging markets where remittances are a lifeline. According to the World Bank, remittances to low- and middle-income countries reached over $600 billion annually, and platforms that can make those transfers cheaper and faster are going to win. Stellar is one of the few blockchains that has actually delivered in that space. Now, when you combine adoption stories like MoneyGram with institutional frameworks like ISO 20022, you start to see the bigger picture. Stellar isn't just chasing speculative hype cycles. It's quietly building infrastructure that aligns with the future of finance. And that's why I'm comfortable buying dips, even if we see price weakness in the short term. Let's also talk psychology here. A lot of retail investors panic when they see red candles. They zoom into the 1-hour chart, freak out about a 3% move, and start thinking the sky is falling. But seasoned investors zoom out. They look at the weekly and monthly trends, and they focus on fundamentals. This is the mindset you need with Stellar. Yes, it might dip to the high 20s. Yes, September could be weak. But if you zoom out and think about where Stellar will be in 3 to 5 years, integrated into global payments, partnered with institutions, aligned with ISO 20022, the short-term volatility becomes background noise. I also want to compare Stellar's setup with XRP's, because the two are often mentioned in the same breath. XRP has been embroiled in legal battles with the SEC, and while it has won some major victories, that uncertainty has weighed heavily on its price. Stellar hasn't faced the same level of regulatory heat, which gives it a cleaner path forward. But at the same time, both share that ISO compliance angle, and both are positioned for institutional adoption. The way I see it, holding both gives you exposure to that narrative, but Stellar might be the quieter, less controversial bet at this point. Here's something else worth noting: liquidity. Stellar doesn't have the same market depth as Bitcoin or Ethereum, which means when big money flows in, price can move fast. That's why you see these explosive rallies when XLM catches a bid. Back in July, we saw it spike to 51 cents, which was a major move in a short period of time. Those kinds of runs are possible precisely because Stellar is still relatively small compared to the giants of crypto. For long-term investors, that's an opportunity. So, to summarize, September is historically weak, and with the Fed and jobs data in play, we could see more volatility. But this isn't a reason to panic. It's a reason to prepare. Stellar's fundamentals are intact. Its ISO compliance sets it apart, and adoption continues to grow. If you're patient, dips are opportunities, not disasters. When we look at the macro backdrop, one thing that stands out is liquidity. At the end of the day, markets, whether stocks, real estate, or crypto, are driven by liquidity. When central banks inject money into the system, asset prices rise. When liquidity tightens, assets fall. And right now, we're sitting at a very interesting inflection point. Global liquidity has been slowly recovering after years of aggressive tightening. Central banks across Asia and Europe have already started easing, and if the Fed follows with cuts, it could ignite a new wave of global capital flowing back into risk assets. According to Bloomberg, global liquidity indicators often lead crypto cycles by several months, which means the groundwork may already be forming for the next major move higher. Now let's tie this back to technicals. Stellar's chart shows that after peaking at 51 cents in July, it retraced sharply, finding support in the mid-30s. Right now, we're hovering around the 30 to 32 cent zone, which has historically been a key area of support and resistance. If we zoom out to the weekly chart, this zone isn't random. It lines up with consolidation levels from 2021, back when Stellar was gearing up for its next run. In technical analysis, these historical levels often act as magnets for price, attracting both buyers and sellers. The immediate outlook is clear. If Stellar can hold the 30-cent support and establish a base, the next target zone is 40 to 45 cents. That would represent a healthy recovery without even breaking into new territory. If momentum builds, reclaiming 50 cents becomes the next major milestone. But on the flip side, if 30 cents fails to hold, we could be looking at a retest of the high 20s. That wouldn't be catastrophic, but it would shake out weak hands before any real move higher. What's important is context. If we do dip into the high 20s during September, that would coincide with the seasonally weak period and Fed uncertainty we've been talking about. In other words, the technical outlook is perfectly aligned with the macro backdrop. Short-term volatility, but long-term strength. That's the kind of setup that rewards patient investors. Let's also take a step back and think about capital rotation within crypto. During the early stages of a bull market, money usually flows first into Bitcoin. It's the safe bet, the gateway for institutional capital. Then it flows into Ethereum, which acts as the infrastructure layer. After that, it trickles down into mid-cap and small-cap alts like Stellar. That's why you often see XLM lagging behind in the first leg of a bull market, but then outperforming in the second and third legs. If you're tracking this cycle, Bitcoin has already begun showing signs of strength, Ethereum is holding its ground, and that means we could be only a few months away from the capital rotation into projects like Stellar. Here's another angle: derivatives markets. Open interest in Bitcoin and Ethereum futures has been steadily rising, but Stellar's derivatives exposure is still relatively low. That means when traders start piling in, the impact could be amplified. According to CoinGlass, open interest tends to spike just before major moves, and for Stellar, that moment hasn't arrived yet. Again, this reinforces the idea that what we're seeing right now is just the calm before the storm. We also need to factor in global economic sentiment. China's slowdown, Europe's energy challenges, and U.S. election uncertainty are all weighing on risk appetite. But crypto has a unique position here. It's increasingly being seen as an alternative asset class, not just a speculative play. Institutional adoption has been quietly growing. Fidelity, BlackRock, and other asset managers are pushing deeper into digital assets. When that wave hits, projects that are compliant and institution-friendly will benefit the most. Stellar fits that profile. Think about it. If you're a hedge fund or a payment company dipping your toes into crypto, are you going to buy a meme coin? No. You're going to look for tokens with actual use cases, regulatory clarity, and integration potential. Bitcoin is the first step, Ethereum the second, but Stellar, because of its payments focus and ISO compliance, is positioned as part of the infrastructure of the future. That's not speculation, that's alignment with global financial standards. So from a macro perspective, we're in the middle of a liquidity shift. From a technical perspective, Stellar is consolidating at a key support zone. The combination of these factors sets up a classic accumulation phase. Smart money accumulates during uncertainty. Retail investors usually wait until prices have already pumped. The question is, which side do you want to be on? Here's where I stand. I'd rather accumulate at 30 cents with a long-term vision than chase at 60 or 70 cents when the mainstream narrative finally catches up. Because when the macro aligns with the technicals, and it always does eventually, that's when the exponential moves happen. One of the biggest mistakes I see investors make is treating every dip as a catastrophe instead of recognizing it as part of the larger market cycle. If you study the history of crypto, the biggest opportunities almost always come when macro looks uncertain and charts look boring. This is why I continue to stress zooming out. If you're trading day to day, you'll get chopped up in this environment. But if you're investing with a 1 to 3 year horizon, these levels look like gifts. The combination of macro, technical, and adoption forces is setting up for a scenario where Stellar could once again surprise the market with how fast and how far it moves. When you study Stellar's history, one pattern jumps out immediately. It doesn't just drift higher slowly. It erupts in sudden, violent moves after long stretches of silence. This boom and bust rhythm is common across crypto, but Stellar has its own unique cadence that makes it especially explosive. Let's roll the tape back. In 2017, Stellar was trading under a penny for much of the year. It was practically invisible, overshadowed by Bitcoin and Ethereum. But when the bull cycle heated up, Stellar ripped from fractions of a cent to over 90 cents in a matter of months. That's not just growth, that's parabolic mania. According to CoinMarketCap's archive data, Stellar delivered one of the most dramatic rallies of that cycle, fueled by hype around ICOs, cross-border payments, and the promise of blockchain utility. Fast forward to the 2018 crash. Like the rest of the market, Stellar retraced brutally, falling over 90% from its highs. For casual observers, that was the end. For long-term thinkers, it was a chance to accumulate. The important thing wasn't the drop. It was that Stellar never went back to its pre-2017 lows. The floor had permanently shifted higher. Then came the 2020 to 2021 cycle. This one is especially interesting because it shows how Stellar behaves in different macro backdrops. Coming off the COVID crash in March 2020, Stellar bottomed around 3 cents. Within a year, it was pushing toward 80 cents again. That's a 25x move in roughly 12 months. What triggered it? A combination of unprecedented monetary easing, Bitcoin's having cycle, and renewed attention on payment networks as central banks scrambled to roll out digital solutions. If you chart these cycles side by side, you notice the rhythm. Long consolidation near cycle lows. A sudden breakout tied to either Bitcoin halvings or macro liquidity surges. A euphoric run where Stellar overshoots its fundamentals. A brutal retrace, but one that sets a higher long-term base than before. That's why I keep emphasizing the importance of accumulation phases like the one we're in now. Historically, these periods feel like dead money. Sideways trading, declining interest, low volume. But they're the precursors to the next vertical phase. According to Glassnode's on-chain activity reports, this is exactly when smart money positions itself. Look at the chart today. Stellar has spent over a year grinding between 10 and 50 cents. It's almost a mirror image of the 2019 to 2020 accumulation band between 3 and 12 cents. Back then, it was boring, overlooked, and dismissed. Within a year, it produced life-changing gains for those who stayed patient. What's also telling is the shrinking volatility over cycles. The swings are still wild, but the lows are climbing. First cycle lows near fractions of a cent. Next cycle lows around 3 to 4 cents. Now we're talking 20 to 30 cents as the floor. That's what structural growth looks like in a highly speculative asset. It gets less binary with each cycle, more institutional, more resilient. And it's not just about charts. Each cycle has brought stronger fundamentals. 2017 was about hype and speculation. 2021 was about serious partnerships, stablecoin growth, and ISO compliance conversations. This cycle, this shaping up to be about institutional adoption, CBDCs, and integration into real financial rails. If history rhymes, and in crypto it often does, we're sitting at the tail end of another long accumulation. And just like before, the catalysts are lining up. Bitcoin's having in 2024 a likely Fed pivot, rising adoption of blockchain for payments. The takeaway is simple. Stellar doesn't move until it does, and then it moves so fast most people can't catch it. The historical cycles prove that the biggest gains go to those who hold during the boring times, not those who chase after the first green candle. Before you click off, do me a quick favor. If you got value out of this breakdown, smash that like button so more people in the XLM community can see this. Drop a comment below with your own price prediction for Stellar in September. I read every single one and I love hearing your perspectives. And if you haven't already,